People of the land, people of Black Box Stocks and elsewhere, we hope you're doing great today. Welcome to What Went Wrong, where we discuss learning from losing trades. And I hope you guys are doing great today. Let me know. Hello, I see some people. Hello there, Charles. Hello, everyone. Drop us a comment. Let us know where you are. Let us know if you have comments or questions as we go on our highly planned out epic odyssey today. Hello, Arizona. Arizona is close to you, Mike, right? You're like in Southern California. That's kind of like Arizona.
I've been there a few times.
You know, I've heard that in Arizona, especially around the bigger cities, it's kind of a Southern California vibe. I've heard that. It's kind of a California lifestyle.
I haven't been there enough to know that, but I used to race cars, and there's a racetrack out there, Phoenix International Raceway. I used to hit that up weekends just to have some fun with high-speed adventures.
Now, I can imagine you probably drifted. Were you in like drifting cars, that kind of racing?
It wasn't drifting. I was more into not even the quarter mile, just the road courses. I like the acceleration, the braking into a corner, accelerating out of it, twisting, turning. It's the whole, oh man, adrenaline type things.
You need to do that still today.
I'm trying to get another car at some point, but when you're into racing, your entire time and every dollar you have goes into those cars. So it's kind of a pain in the ass.
There's no doubt. I used to race motocross. I used to race motocross, the 125cc. And I'm kind of with you. So we got the Pacific Northwest, beautiful Washington State is with us today. Greetings. And we got BC, Canada. Speaking of the most beautiful places in the world, I don't know, that British Columbia might take the cake for the most beautiful place I've been, but you know, whatever. All right, so Mike, what are you doing today? What's going on, buddy? How's life?
I've got zero complaints whatsoever. It's a beautiful day. I hit the beach all morning, and now I've got great news and I've got bad news for you.
Oh no. Well, let's do the bad news first. I like to get it out of the way so we can just rip the Band-Aid off.
The bad news is I have nothing to talk about this week.
Worry not, dear listeners. You are going to be under the spell of the Great River tonight. It's going to be so exciting. It doesn't matter that we have very little planned. It's going to be amazing, and you guys are going to ask us questions. But that's not too bad of the news. We can handle that. That's the bad news. But what's the good news?
The good news was the reason I have nothing to talk about this week, and I am super excited because you know, when you're trading for a while, you just don't get excited over a whole lot because it's just routine. It's just something you do. But every now and then you do something that's just, it brings back the excitement to it. Yeah. And this week, I've had plenty of weeks in my trading career where within the week, I haven't had a losing day. I've had losing trades within the day, but by the end of the day, I ended up green. So I've had weeks where I've been green the whole week on the day. This past week, I actually, for the first time in my entire trading career, I did not place a single losing trade.
Oh my gosh. You know, Morris in the comments here called it perfect. You had a perfect week. So
it's not insane because, like I said, I've had losing trades in a day that ended up green. But to go the entire week without placing a single losing trade, I've never done that before. So and I think I'm going on probably 6 years of full-time trading.
So not just net green, you literally didn't lose a penny on any trade you made.
Every single trade was green, which, like I said, it kind of shocked me when I look back at the end of the week because I was like, I knew I was having a good week throughout the week, but it never dawned on me that not a single trade was red. And then kind of reviewing the whole week, I'm like, holy crap, it's literally the first time in 6 years of trading that I've ever. I mean, it might have happened when I first started trading, when I placed like one trade for the whole week. Yeah. And then I can say, oh, perfect week, because I only placed the one trade.
Yeah, I was about to say, are you tricking us? Are you tricking us with like 3 trades this week? How many trades did you make, approximately?
I don't know the number, but it was probably somewhere in the upwards of, 25 to 35 trades.
That is amazing.
It wasn't one of those super busy weeks where I was scalping every 6 minutes, but I mean, it wasn't a trade a day. So
yeah, you make 30.
It was just exciting to do because, like I said, 6 years of trading, and I've done some things that I'm proud of, but I've never had an entire week where
It's amazing.
Like I said, unless it was one trade a week when I first started out or something, but you can't count that. So as far as full-time trading, like legit trading to make an income, this is the first time I've ever gone the entire week without and I don't anticipate it happening again. So it's something I'm just kind of enjoying while I went and reviewed the trades, knowing that that's not even a goal necessarily. I want consistency, but I'm okay with the losing trade.
Yeah, sure.
As long as the consistency is there, I'm fine. So I don't think I'm going to have a perfect week every week from here on out. It was just one of those things where everything throughout the week just fell into place. And I do have something we can talk about as far as what possibly could have went wrong. But It was one of those weeks where things just fell into place. And it wasn't one of those things where I was like forcing, like, oh man, the market's slow. This kind of looks like a trade, but there's no volume. Let me take it anyway. There was nothing like that where if I didn't see something that just met my criteria, I just didn't trade.
And this was a tough week. I mean, a lot of people had trouble out there. You know, this was kind of a Monday went down, Tuesday chopped, Wednesday went up. Everybody got euphoric. Remember that at the end of the day, Wednesday, everyone was like, yes, we're up. Everything's great. Bear's dead, you know, not everybody, but some people were saying that. And then Thursday, not so great. And Friday, man, just that big sell off down to the close. So this is a strange, rangy week, and you killed it.
It was, but so for me, I didn't swing anything the entire week. So I was literally 100% cash every day at the closing bell. So it was probably anywhere from 5 to maybe 6, 7, 8 trades a day. Yeah. But every trade, it was like I had no intentions of swinging anything except one of them, which actually is the one where I'll talk about what could have gone wrong. It made a profit on it, but so we'll talk about that in a second. But it was one of those things where I kind of don't care what the market does because I'm 100% cash. So basically, if we gap up 300 points, it doesn't affect me, and I'll find a trade after we've gapped up. If we gap down 600 points, it doesn't affect me. I'll find a trade after we've gapped down. So I think the only reason that I was able to do that this week is because I didn't swing any trades. Right, so it was one of those things where I didn't have any overnight risk where I had to manage it. If I did that, I can tell you some of the trades I was in would have been disastrous.
Yeah, sure.
I was in calls one day that the next day would have been destroyed. So the reason I was able to do that was because they were all scalps or day trades. I didn't swing anything, like literally the entire week, not a single swing trade. Well, again, sorry, there was one swing trade, but it was profitable.
So here's a question, the general question. I know sometimes if I get like 12 green trades in a row.
Are you trying to jinx me?
No, I'm just saying I'm trying to learn because like Travis says, we are not worthy. And you're right. You are much more everything trader than I am. You're definitely more disciplined, you're more experienced. So the idea is this: when I get up like 10, 12 wins in a row, I take bigger, like I get stupid, I get overconfident, and I know I'm not supposed to, but the truth is I do often get overconfident. So how did you keep that in check once you're up to like say Thursday and you've just been doing nothing but wins? Did you get a little overconfident? Did you take some bigger trades on Friday, or is that just not in your parlance anymore?
No, so here's the thing about, like, I'm kind of aware of, I've placed 2 trades in a row, I've placed 3 trades, I've placed 4 trades, but I wasn't counting the number of trades that I was placing or the number of trades that were in a row. So it didn't dawn on me that I had, 10 trades. The next one has to be good or I'm going to ruin my streak. I've got 15 trades. The next one has to be good or I'm going to ruin my streak. That wasn't a thought process because I wasn't focused on how many trades I was making in a row. It was just, is this the setup? And it kind of did something to me, this whole thing where we started talking, where during the week I'm asking myself, if I'm taking this trade, could this potentially be something that ends up on what went wrong? So it gives me that second opinion of maybe if this is potentially going to end up on what went wrong, it's not a trade I should be in.
Yeah, sure. But you had to be aware that you haven't, like, it just had to be in your mind. You may not know the number, but you knew that you weren't losing money, and you had green trade after green trade after green trade. So did you feel any overconfidence? Because like some people are saying in the comments, and I've done this before too. Overconfidence can take profits away quickly, and I have done that.
Oh, it will in a heartbeat.
So did you feel a little of that or not really?
I didn't. And the reason why, and now
Well,
sometimes, look, I'm not up on a pedestal. I get cocky quite a bit. Okay. Sometimes if you follow me on Twitter, you've seen some things that I might have been like.
I've seen those kung fu pictures, man. That's a confident man.
I mean, there are times where I'm just cocky. Let's be real.
That's what's fun though. You're confident. It's not.
But the thing about this week, I wasn't this week just because I was more kind of in tune with the market being nuts. In other words, like I didn't want to get cocky because I knew, okay, I made money on a call here, and then I turned around and made money on a put. Then the next 3 trades were calls, the next 2 were puts. So it was kind of like I couldn't get overconfident or cocky because the market was just keeping you on your toes. Yeah. So you didn't have a chance to really just fall into a rhythm and be like, oh, I'm just going to buy calls here, calls here, calls here, calls here. I was making money literally on calls and then switching to puts and then back to calls by the end of the day or whatever it was. So the market basically didn't give me a chance to get overconfident or cocky because every trade was, reversing from calls to puts. Yeah. So it was like, if I do get cocky, I'm just going to, totally blow everything up. Like this is a week where I need to really just watch what I'm doing. And then there are other weeks where I kind of get complacent, where it's like, okay, well, that trade didn't work out. Let me see what the next setup looks like. So I didn't have that mentality of if it doesn't work out, let me just find another trade. I had the mentality of before I even get into a trade, like, do you really want to be in this trade? And there were some setups that I was just looking at, like, if it breaks this level, I'm just going to enter the trade. And that was it. Whereas maybe previous weeks, I'm like, yeah, if it breaks this level, I want to see volume. But if the volume doesn't come, as long as it breaks this level, there's like little things you can adjust to alter your risk tolerance. Yeah, sure. And in previous weeks, sometimes I trade aggressively where I'm going to try and anticipate a move. And those are the ones that, typically well, not typically, but, maybe 50% of the time or whatever, if you anticipate something, it doesn't work out.
Yeah, sure. That's interesting too, because you're a very disciplined trader as far as entries and exits, and you're kind of, support resistant breaks, what some people call kind of one line, entries and exits. You're known for that, right? I think you're pretty famous for that actually, and it does say a lot because you're so based on support and resistance, and also, charts. Your charting is so solid. It's interesting that there's so much swing in the market and so much wildness this week. You could just with ease go up and down and just back and forth, and that's great, man.
Well, I know it is. Before we started flow trading, all I was doing was technical analysis anyway. Like that's just the way I traded. And then when I got involved in flow, you guys might have heard me say this before, I was doing about 10% flow trades, 90% technical analysis. And then there was a point where it was 50-50. And then prior to November, it was like 90% flow trades, 10% technical analysis.
Yeah.
And then November came, the market changed. And right now it's like 99% technical analysis. I think in the last, let's call it 2 or 3 weeks, I might have taken 3 or 4 flow trades. And every other trade was based 100% on technical analysis, no flow at all. Yeah, so it's not something that it's like I've got to learn a different method of trading right now. It's just this is the way I traded before flow. And flow just made things so much easier that I got lazy with it. But now that the flow isn't there, it's like, okay, I really need to focus on, it's got to be a chart trade because the flow just isn't there.
I'll say it was pretty easy in August and September to just to flow trade. I will say that was my experience too. It was almost like, okay, here's a flow coming to the phone. Okay, well, I'll take.
Yeah, you've got to take advantage of periods like that.
It was awesome.
Trades just fall in your lap and you just open them, and like 3 weeks later, you're like, oh, I'll just close it here for 200%. You've got to take advantage of market conditions like that.
A couple people have asked, I could answer this for him, but I won't. But they want to know, do you use limit orders or stop limit orders or market orders?
I don't. I'm just a market order guy. And the reason for that is if I'm looking at, so as a scalper, I want to be as quick as possible. So when I see a break of a support level or a resistance level, depending on whatever direction I'm looking for, when it breaks that level and presents, this is the opportunity, I want to be in the trade.
Sure.
So there are plenty of times where I've done a limit order, it didn't fill, I have to adjust it, it didn't fill, I adjust it again, and by this point the underlying is up 40 cents from where I wanted to get in.
Oh yeah, I can't
I
stand
just don't do that anymore. I just, if I want to get in, once the setup presents itself as this is where you should be in, I want in. So I'm just going to market order. Now the exception to that, and I do market order Tesla, believe it or not. The exception to that would be sometimes on an Amazon or a Tesla. Sometimes I will do limits for those. If the spread is like on Tesla, maybe it's $6 by $7.30.
Yeah, right.
Something like that, I'll do a limit on, or I just won't take the trade.
Yeah.
If it's this week, I was trading Tesla with like 30-cent spreads, and I was just entering market orders on those, knowing I'm going to be on the higher end of that, and I'm immediately down $30 a contract just because of the spread.
Yep.
But I'm just typically, I'm like 99% of the time, I'm just market order in and out.
Okay. Yeah. I mean,
that's not right for everyone. I'll put that disclaimer out there also. That might not be the right way for everyone to trade. I know of the limitations and the risks of doing that. Right. And I won't do that on Thinkorswim because Thinkorswim has horrible fills for me and for countless people that I talk to.
I was just about to say it depends on what broker you're using and how comfortable you are, and what your tolerance is. That's a great answer. So let's talk about your thing. I've got a thing too I can talk about, which is kind of an interesting thing, in that I missed out on some things this week because I didn't take any trades this week. I was on vacation and I just have this kind of mindset where I just have to be really focused or I just don't trade. And I was watching it, but I wasn't trading it. And there were several times I could have made money, on the couch, on my vacation rental, on my phone.
But I applaud you for not trading.
I didn't trade. That's right. Not at all.
So there are times where you can, like, maybe you're into it and you're like, you know what, I'm on vacation, but whatever, I've got 15 minutes. Let me see if I can find something, and cool. But if your mindset is just, I'm not going to trade, then you might be able to make money, but you might also be forcing something because you're like, you know what, I'm bored sitting on the couch, whatever, let me see what I can find. So knowing your mindset of you're in vacation mode, you don't want to trade, and not placing a trade even though you saw something that you might have liked, hats off to you for that. That's discipline. And that's what in the long run is going to get you. I mean, you said many times you don't want to be a full-time trader, but that's going to get you the consistency of just making money.
Yeah, right. The last thing I did trading related was my interview on the podcast with Hells Bells. And he was
great, by the way.
Oh, thanks. Did you catch some of that?
Hells is an interesting character. And he's got like I said, he does this thing on Twitter where he does a market recap, and I don't like retweeting a lot of stuff, but I'll retweet his stuff, and then I'll try and get people, like, don't wait for me to retweet his stuff, go follow him directly. But Hells is one of those guys that he's just got a really good read on the markets. Those market recaps he does are great. And then I don't know him outside of trading, so to be able to kind of hear a little bit about the non-trading aspect of him, I definitely enjoyed that one.
Yeah, that was so much fun for me. He's a madman. He's a mad genius when it comes to just kind of that broad knowledge of the internal workings of the markets. It's a crazy stuff. I totally agree about his write-ups, but we talked a lot about the geopolitical unrest, and like we don't really need to get too far into that, but just as far as that affected the market a lot, both ways this week. And I think that definitely could be part of this, wildness that we see going in and out. So
it's definitely a headline sensitive market. So that's going to play or take into account, the daily swings of stuff. A good headline, you get a good move. The next day, a bad headline brings it right back down. So it's definitely, it seems like we move from one topic to another, whether it was the interest rates, now it's the war. There's a lot of things that will basically keep you on your toes right now. So you've got to be nimble to make it in this market. In my opinion, someone who's very successful at swing trading would probably say something different. But right now, I can't be comfortable, and this is part of just my personality. I can't be comfortable opening a position now thinking I'm going to hold it for 2 weeks. I want to capitalize on whatever I see today, and then tomorrow I'm just going to start fresh with whatever direction tomorrow gives me. And if I miss a nice overnight gap, so be it.
So I can't imagine holding something 2 weeks right now. But I know there's people like Lamb, he was on Twitter saying it. He was, I don't, I'm probably misphrasing him or whatever, but he said basically it's not a horrible time to swing. It can be done, and he was making some great points. And so there's definitely traders with certain mindsets who most definitely are swinging in this environment. But yeah, I can't imagine holding anything for more than 2 days. Frankly, I just can't at this point. But it is what it is. We're all different. So let's talk about that thing you've got, because just real quickly, kind of the spirit of this is not just me and thee talking about whatever in the most entertaining and charismatic way in the world. I mean, that we could do that for 5 hours, right? But we're not going to, don't worry. But the idea is we talk about something relevant to losing trades, and we put that in the framework of education, of learning from it. And this idea that you learn through failure is a thing that is going to be an amazing teacher. And if you're not refining and reflecting upon your failures as a trader, or I would say as a human being in life, right? Just generally, but you're not going to grow as much as a trader. So that's kind of the idea, is that we just openly and honestly discuss, learning from losing trades. And today, you guys are kind of active in the chat, and I definitely hope that you guys, if you have any specific questions, what did you have trouble with this week? Hit us up with some questions in the question box, comment, and we'd love to kind of, talk to you guys, kind of, directly respond, kind of treat this like a Q&A, and we'll definitely get to any questions and comments you have. But it's just about exploring, learning from losses. So what do you got, Mike? What almost happened? What do we got?
So this is something people that know the way I trade and have watched me over the years, like I'm just a short-term trader. That's how I am. Now, I used to be a swing trader, and then a while back, the markets got spooky, so I turned into I was day trading and swing trading to start out with, but then I was primarily a swing trader. It's just easier to open a trade now and close it a month from now. Yeah. So it's much less work than doing, open and close 15 times a day for 20 days, then just open one trade now, close it in a month, and manage it along the way, whatever. So when the markets got funky, I turned back into more of a day trader and a scalper. So this is something I've always struggled with as of like the last 2 years, as far as just becoming basically not necessarily a swing trader again, but looking on a longer term time frame than what I currently trade at. So we had a specific instance in the market that made me open a particular trade. I was looking at IWM. Okay. If you guys are members of Black Box, you know where this trade idea came from. Yep. So I went and bought, it was a single contract because I was going to test something. So I basically bought a single contract telling myself this trade is either going to do what I want it to do, or it's going to go to zero, and I don't care which way it goes. It was 145 bucks. So if I lost 145 bucks, I wouldn't care. It's not going to impact my life. Right. So I bought it specifically saying, if it doesn't do what I want it to do, it's going to go to zero, and I'm okay with that. Okay. So that was my trade idea. I went with 422 or 424, whatever that expiration is. So I had plenty of time. Right, we're talking the end of April, plenty of time for IWM, and I wanted to see if IWM would hit 208. Or 208 to 209 was kind of where I have a potential resistance level. So I bought, and we were trading a little under 200. Okay, so that's far out of the money for the way I normally trade. It's more time than I would normally get, which isn't the way I trade. So again, to combat that, I said, I'm just going to buy a single contract, and I'm going to commit to knowing, worst case scenario, I lose 145 bucks.
Hero or zero.
145 bucks, but if I do, it's not going to change my life in any way whatsoever. So I'm committing to experiments out of the money with time, based on a specific reason. And again, if you guys are part of Black Box, you know the reason. I'm not going to really go into the whole background of it. But I was buying a 215 IWM call for the end of April. So here's what happened with it. I bought it on the 7th. I closed it on the 9th.
Wait, hold on. Was this the dark pool thing?
This was.
Okay. So
the dark pool print was 212.
Yeah.
212 and change, whatever it was, 212.48, I think, but 212 something. So I bought a 215 call with plenty of time to allow it to get there, and thinking even if it doesn't go there, it's as long as it goes upwards in the right direction, we'll be fine. So I bought it on the 7th, March 7th. The expiration was the end of April. Plenty of time to let it play out. I closed it in 2 days anyway.
So you must have profited a lot. Was it a big profit?
It wasn't a bad profit. It was 30%.
So 30% in 2 days and you sold. That's interesting.
Yeah. So this is the part that I still to this day have trouble with, and audience participation would be great here. You've got to be fluid with the markets, right? Let's say I open a position now and I say, I'm going to swing this trade for roughly 2 weeks. We'll see what happens in a 2-week time frame. And the same day a buyout rumor comes and that stock goes up, 60%, or your contracts go up 60% or 300% or something ridiculous. You would kind of be dumb to say, I'm still going to hold it for 2 weeks, right? So you've got to be fluid and be able to change how you manage something based on information you get in the moment. The problem that I'm having with whether I did what I should have done, and so here's the thing. So we were trading under 200 for IWM. I don't know where it was at. It was just over 200 when I was looking at closing it, because it looked like it couldn't hold the $200 level. So it was above 200, dipped below, above, dipped below. And I just felt like, you know what, it's struggling at 200. I'm up 30%. Let me just close the trade. And that would be my normal trade thinking.
Yeah, that's perfectly reasonable. That makes sense. That's a technical close. Yeah.
But so the next day or 2 days later, I don't know, I only had it for 2 days. So it was either, well, it would have been 2 days. So Friday, what happened yesterday? I'm all over the place. I have no concept of time. So yesterday was Friday. It gapped up to 203 pre-market. By the time it opened, it hit up towards 202. So remember, I closed at 200. And it hit a high of 202. So it was a little under 202 on Friday. So I didn't capture the amount of gains I could have.
What delta was it?
No idea. I don't look at them.
Gotcha.
But it closed Friday at 196. So way below where I closed it. So again, the thing I struggle with, like right now, it looks like I probably did something good in the short term because it's 196 and I closed it at around 200. But my intentions when I opened the trade was it's either going towards the 208, 209 resistance that I see, or I'm okay losing the full 145. And I specifically did a dollar amount that I wouldn't care if I lost it. And yet I still said, no, 2 days up 30%, I'm closing the trade. So I had my trade plan, but then I adjusted it.
That's right.
So I don't know. I'm kind of mad at myself, but then I also look at it and say, that's just the way I trade.
Was it based on emotion? Like, did you see it like, testing that possible 200, maybe breaking through, and you kind of feel that, okay, well, was it kind of fear-based a little bit of losing that profit?
Well, it wasn't emotion. It was it looked like it was struggling at 200.
Yeah, right.
So 200 and that 200 is it's a resistance level I think I had on the chart, but it's also that, emotional solid $200 level.
Yeah, right.
So I was looking at it, it was above it, but then below, then above, then below. And I just kind of looked at it and said, I can rationalize closing it here because it's struggling to stay over 200 and I'm already up 30% in 2 days.
Right.
Now, the dollar amount isn't anything like 30%. It was like $30 or something. So it's not the dollar amount, but to drill in my mind the way I trade, 30% is 30%. So I don't want to focus on it was only $30 or whatever it ended up being. I want to focus on this is a trade that's up 30%, manage it correctly.
So this original thesis of, well, 208, 209, I'm okay letting it go to zero, like that must have been pretty strong, right? So is there any reason?
It was, because there's no way I would have bought a 215 call for something that was trading at 198. That's not the way I trade.
So if this, in 3.5 weeks hits up to 209, or I know you're past this. This might be an insulting question, but is there going to be a part of you that's going to see it when it hits 209 and be like, dang it?
So in this case, yes.
Right, because you
So
changed
normally if it, whatever, once I'm out of the trade, it's, I don't care. It's not my trade. In this case, the reason I opened the trade was a very specific reason that
That's
shows me this could potentially go to this particular level. And I opened it with a position size that I don't care if I lost it. So
yeah, yeah.
the very specific trade plan was buy this with this much time for this specific level. So if it ends up going there, I'm going to look back and say I had my trade plan and I didn't follow the trade plan. So I'm probably going to be upset with myself at that point. If it never gets to that level and it just straight drops from here, I'm still going to question, I had a trade plan and I didn't follow through with it. Even though it worked out.
Yep.
It worked out this time, but over the long run, am I being too fluid and not letting stuff work out? And the reason I want to work on that stuff is because you, as well as everyone on Twitter, knows I just sell things early.
I do too. I mean, that's, I don't blame when somebody earlier asked in the comments, what's a good profit taking area? Generally, I think they said, I'm sorry, I'll scroll up, but I think they said that they do 20 to 40%. And is that reasonable? And like, 20% profit to me is amazing. That's great. If you do that over and over, it's going to be great. So you got 30% of it. I'd have no issues. But if you still have that original thesis, I mean, it's on sale now. Is it still valid, that dark pool idea you had? Because you could buy it again and try it again.
It could be, but the way I trade, once I'm out of a trade, I don't go back and do it again. It's kind of like I made my 30% gain on it. If I were to give back 30%, I'd be pissed.
So I'm
just not going to trade it again.
Yeah, that's a subjective thing though, because if that dark pool is still there, you could maybe get it for 115, next week, and maybe still see it play out. But you've got this subjective rule that says, I don't want to say anything lewd in an analogy, but you've got this idea of, well, once I'm done, and I'm moving on.
It's not necessarily a rule. It's just the way the reason I won't get back into a trade I got out of is because I'm not looking at that trade once I exit. You know what I mean? So once I'm out of the trade, I don't sit there and be like, oh, it's going up again. Oh, it's back down. Oh, it's back up. I'm off the trade. Yeah. So if there was another setup on that particular ticker, I wouldn't see it because I'm purposely not llooking at that chart again. Sometimes I'm out of a trade and I just leave the chart on the screen because it's the last thing I was trading, so I can see what it's doing. But for the most part, I'm purposely going to other tickers to see if there's a new setup.
Yeah, sure. Hey, William asks, would it have mattered if you had more than one contract? Would that have had a different? Would it matter one way or the other if you had multiple contracts instead of just one?
It would have changed my original trade thesis. Not to the point where, I don't know how to phrase this necessarily, but it would basically, if I had multiple contracts, like a normal position size, and it was up 30%, I would have closed it and just moved on to another trade.
Yeah, you wouldn't just risk that and say, well, I'll let these 20 contracts.
Or I keep one or two of them on and say, okay, let's say I have 10 contracts, and it goes from 198 to 200, and 200 looks like it's struggling. Close 3 contracts, lock in 3 and have 7. And then if it gets above 200, close 5 and have 2 left in case it does do the full run. You can do something like that.
Yeah. Sure.
So if I had more contracts, it would have been a regular trade for me. The reason I did the single contract is because I wanted to test a specific trade thesis.
That's right, all or nothing. Yeah.
So again, it's coming back to, I didn't follow through on my trade plan because I treated it like a normal trade when I entered the trade to not treat it like a regular trade.
Okay, so that's an interesting, brings up a question. So you've been trading full time for 6 years, and you've been trading longer than that. So you said it's just the way you trade, and are you too fluid, or is that just how you are? Is it possible that we become specialists in certain things as traders, and then we get so, like, our neurological pathways grow so accustomed to that maybe at some point it's not possible for us to branch out? Is that possible in your mind? Maybe you just are a short-term scalp position trader, and that's what you are at heart, and it might just be too long for you to it may be too late for you to be anything else. Is that possible? Or not just you, just anybody?
I agree with the first part, not the second.
Yeah, okay.
So because I've changed my trade style over the years many times. And you have to based on market conditions,
Right.
right? So I was basically buying flow and then selling it. Even if it was 6 months out, I wasn't holding it for 6 months, but I wasn't trading it today and closing it tomorrow.
Yeah.
I would hold those a little bit longer. Once the market conditions changed, I felt like I couldn't do that the way I was doing it successfully before. So I have to change the way I trade. And then if we go from the chop that we're in now to just a straight uptrending market, I'm going to go back to swing trading.
Yeah, sure.
I don't want to place 15 trades in a day when I can do 3 trades, close them out a week from now and make the same amount of money that I would have made if I did 15 trades in and out all day. Because that's a lot of work. And it's taking on more risk by taking all these entries. I'd rather place, a shorter or a smaller amount of trades and just let them do their thing. But in the current market we're in, I don't feel like I can be successful doing that. And like you said before, there are some people that can swing and just knock it out of the park. I don't have the personality to do that, because when I see those short-term moves, my brain just defaults to, oh, you're up 30%, close the trade. That's just how I manage a trade.
Right. Yeah.
When the market changes, I will go back to holding things longer. Still not as long as I'd like to, but longer.
I haven't had I've closed things out way early since January began. I haven't made 30% this year. I definitely haven't. I've been taking profits really between probably 5 and 15% most often, and that's just that's what I do. I like to do.
If you can rack those up, though, that counts.
Well, yeah, the number of contracts I'm comfortable with, and just do small. But that's the thing. I haven't seen 30% since back in but before November, when we would just swing things like maniacs. I would just buy something and not even think about it for a couple of weeks.
Yeah, and prior to November, if you got 30%, you got the lowest end of everyone else trading the same trade, right? Yeah. So again, you kind of have to adjust the way you trade based on the market conditions.
Yeah, sure. So that's super interesting. Like I actually had a mistake maybe like 3 weeks ago now. That is, like, I thought I had moved past this. I was going to mention this on the show for sure. This is my thing I've got for today. And I mean, it's just really in the spirit of, if you're out there and you're a newer trader and you do what I'm about to admit to doing, you are not alone. Experienced traders do it. I'm an intermediate trader, but even really experienced traders probably sometimes do this. I don't think Mike does this anymore, so I want Mike to, in a very kind and loving way, kind of yell at me for doing this, because this is true. I opened a trade that I was going to scalp, and it was 3 contracts, right? It wasn't huge, but it was a bigger price, right? I had my plan going into it, and you can probably guess. It surprised me I did this, because I haven't done this in a year and a half. It broke my plan to get out, right? It went against me. And guess what I did? I thought, all right, let's give it another candle. Let me give it another candle. And it kind of started chopping sideways, and then it kind of got worse. And I saw another dynamic support down there, which, by the way, I did not plan on using, just like we talked about many times. Oh, look, there's the 34. I'll give it to the 34. And man, I just kept hanging on with hopium. That's exactly what it was. I fell victim to hopium for the first time in a long time. And I mean, I lost 50% on the position, and it was, hundreds of bucks. So I was very surprised that came out of nowhere. And I felt it. It was emotional. It was straight up hopium. And that's the first time I've done that in a long time. What do you think? Is that a bad overall sign? Or, I've learned from it. I know the deal. But I was surprised I did that. I used to do that back in the day, and I thought I was over that. And then it just came out of nowhere, and I did it 3 weeks ago.
I don't think it's a bad overall sign.
Crazy.
And here's why. You haven't done it in weeks. You did something that is outside of your normal rule set, and it reinforced why that's part of the rules that you have. I don't think you'll do it again. If you did it again and then again, then yes, I'd say it's a bad thing. But there are plenty of times where I've got a set of rules that say these conditions are met, I'm comfortable entering a trade with relatively high risk. And then maybe 1 or 2 of those conditions aren't met. And instead of pulling down the risk, I go in with the full risk anyway and say, well, that's the stuff that's a problem.
Yeah, right,
And
right, right.
we all do it, whatever rule, whether it's chasing, whether it's oversizing, whether it's not cutting a loss, whatever your rule is, we all have something that from time to time we're going to test it and we're
Yeah,
going to go, oh yeah, that's why it was a rule, because I didn't follow it this time and it hurt me.
yep,
So
yep.
normally, if my conditions are not met to enter a trade, but I still like it for whatever reason, I'll take the risk way down.
Yeah,
Right. So it's a problem to me when I do the same risk allotment for something that I'm not, every condition for my favorite trade isn't met, and I'm still taking the same risk allotment. To me, then it's like, well, what are you doing? Like the risk factor of the trade went up a little bit, but your risk tolerance for some reason stayed the same. Like, no, pull back the amount you're gonna put into that trade, because you know for a fact you like 6 things to occur and only 3 have occurred.
yeah, right. That's right.
So don't take on the same amount of risk. But if you take a very small position because you say my entire conditions aren't met, but I still for some reason like the setup, so I'm going to take it, just take it with a much smaller risk, that's fine. And then if it goes against you, you say, okay, well, that reinforced why I had the rule in the first place. And if you make a little money, you say, okay, I knew the risk was increased and it ended up working out, so it is what it is. It becomes a problem when you don't realize, your normal position size is $50,000 per trade, and 3 out of 17 conditions you like are met, and you go in with a $50,000 trade. All right, that just blows my mind. It's like your
I,
normal trade style, what your conditions were not met, and you didn't reduce your risk factor at all. Like that's what's the problem.
that's the truth. And I would like to add, I don't appreciate you telling everyone my normal position size is of $50,000 per trade.
I mean, you're a baller. It's time to come out.
That's not true. See, I think because I'm part-time, actually, I know because I'm part-time, I can take on a little more risk than, say, a full-time trader, generally speaking, right? So I think in the past, that was kind of the idea of like me being part-time made me take a little bit more risk than I should, because, and this was like maybe, a year, 14, 15 months ago, I was like, oh, I'm just part-time. You know what I mean? I've got this gig. I don't need this as my primary money. So I would take on more risk than I needed to. And I kind of got rid of that because I realized it's still real money I'm throwing away if I'm just taking stupid risks.
Yeah,
But
but as long as you accept the risk, that's kind of
yeah,
okay. Right?
yes,
That's kind of what I did with IWM. I don't normally trade that far and that far out of the money, but I
yeah,
was willing to take their trade because I was reducing the risk to a point where it wouldn't hurt.
yeah, right,
Like
right.
I don't want to lose $145, but if I did, it's not going to affect me in any way. So like I reduced the risk to the point where I can do something. The trade setup itself had more risk than what I would normally do, but I'm accepting that risk, and to mitigate it, I'm just doing a position size that doesn't really bother me.
Yeah, right, right.
So if you do that as a habit, then it's a problem. But if you know ahead of time, like if your income comes from whatever you do in the real world, and you say, I want to take $5,000 into a trading account and just play around with it,
Yep, yep.
you can take on more risk, because if you lose that $5,000, your life isn't affected.
That's right. That's correct.
But
Yeah,
if
that,
you want to transition to doing this as a side hustle, and you say like you don't want to be a full-time trader, but maybe you want to go on a wild, kayaking expedition on some river that, maybe for a week vacation it's going to cost you 12 grand.
yeah,
Well, hey,
yeah.
let me put in this trading account and see if I can make 12 grand out of that and go on this wild adventure halfway around the world. So, right, there's different risk
Right.
tolerances based on what you're trying to do with your account and stuff like that.
Right. Yeah. It was yeah, that's exactly as my goal. Like I love the idea of just paying for stuff we do and paying for toys or whatever, or even just stuff we need from trading profits. It's just a great feeling as a active part-time trader to do
So
that.
you can, in that position, take on more risk than someone who their account has to pay their bills.
No doubt, no doubt. But
It's
just to be
it's a
clear,
different mindset, and they're both correct. Like one isn't, you can say one's riskier, but it's really not, because if you lose money that you don't rely on for anything, was it really a risk in the first place?
that's
You know
correct.
what I mean? It's acceptable.
That's why you and I think, are a great team for this, because like if I lost my entire trading account, I mean, I wouldn't be happy. Don't get me wrong. I'm not made of money. I would not be happy, but it wouldn't affect my life at all. if you lost your entire trading account, Mike, you'd be back at the retail place or something.
Not good. It would not be a good situation.
You'd be moving back to Queens, number one. No, I'm kidding. I know
So,
you're from Long Island. I'm just kidding.
That's basically what it comes down to, right? Is like you and I can trade the same thing, but we're going to look at it with a different mindset.
Very differently, right? And it was shocking though. This thing, it was those contracts. It was Tesla weekly on like a Wednesday, and at a 0.5-ish delta. So not a $200 contract. You know what I mean? And yeah, I mean it met my criteria to exit, and my hand was on the button, and I thought I'm just gonna give it one more candle. You know what I mean? One more candle turned into taking a much bigger loss than I should have. So I was just really surprised that happened again. But it just goes to show, if you're out there and you're dealing with hanging on to losing trade too long, I mean, everyone does that. I mean, the guys who are doing it, full time for a living, they probably don't do that often. But I do have to ask you, when's the last time you just really broke your rules and hung on too long to a trade? I mean, has that been years at this point, or not so much?
I have 2 current positions that are going to go down 100%,
Okay.
but they were within the. I mean, I kind of stopped looking at them, so I would have to double check now. But they down 100% was kind of within the rule of those 2 trades.
Okay.
So
that's
I
not
didn't break the rule necessarily, but they're 2 trades that I don't let things go to 100% loss. Like I said in a previous episode, I might do that 5 times a year. And in this case, I have 2 of them currently open right now. So I didn't break a rule to do that. But they're 2 trades that I probably could have managed if I paid more attention to them a little bit differently. They were based on flow, and I basically said, since the big money is in, I'm staying in.
One of them starts with a vowel, doesn't it? Are you still in that?
One of them is Geo.
Wow, the Geo from back in the day?
I lost track of kind of watching it and just said, I'm just going to sit in it. And I don't even know if they closed out of the trade or not because I stopped watching it.
We should look that up on Amit's tracker real quick.
We should. And then the other one is, what is the other one? The other one's Oatly. I'm still in that.
You're still in the Oatly.
But those trades were down so much at one point that I just said, you know what? That's part of the risk tolerance, and I'm just not going to look at them. They were based on flow, and I was saying when I got in the trade, I was like, listen, this is how I trade. And then the bad part is that those are in the small account. The good news is that even if they go to 0, that small account is still above where it started. So it doesn't bother me.
Right. Yeah, the small account's killing it, but part of me wants Oatly to come back and profit. It can't be possible at this point. Isn't that like 90-something% down?
I think that one expires this month.
3/18, I think. 3/18.
Okay, that one's toast. The other one expires in June, so there's hope, but I've written it off. In my mind, that money is not coming back from 98% down. So if it does, cool. If it doesn't, it's already written off in my mind.
And that really is like the original question was, when's the last time you actually broke rules and just held on, knowing you shouldn't, but just that's been a long time, hasn't it? Since you've done
when I explicitly broke a rule to do it, I don't know a date, so it's long enough that I mean, I might look at something and say, if it breaks this level, I'm going to close it. It breaks that level, and then I watch 2 or 3 candles more and then say, you know what, let's just close it out. But I'm not letting it go like 15% further from the level or anything like that. So like when I intentionally ended a trade and looked back and said, oh man, I really messed that up, it's been a while. Gotcha. Because like I said, again, in the other episode, I've got problems as a trader. So when I say, like in the FOMO episode, I say I just don't have FOMO. And that's not to say I'm an amazing trader. It's just that's not a problem I have. Cutting a losing trade, again, I'm not the most amazing trader out there, but cutting a losing trade when it's the time to cut it, that's just not a problem I have. I'll do it from time to time, but it's generally not a problem. My problems are letting trades work to the full extent of the trade idea. I'm always cutting them short, and that's a big enough problem that it kind of makes up for not having 5 or 6 things I need to focus on. because the one thing I need to focus on, if I just change that one thing, it would bring me to yet another level of trading. So all of my focus is kind of on that, and I'm in this rut where I'm just, and the market conditions right now are reinforcing that I should be. So I feel like I'm going to have a harder time breaking that when it's time to break it.
Yeah. Yeah.
But I haven't recently closed a trade where I was like, oh man, I should have closed that, a week ago or anything like that.
Yeah. That's it. It's just a thing. I think everybody who trades at whatever level they are at, if they have been trading for, if they've been actively trading, say, and I define that, I don't know if this is an actual definition, but I think you're an active trader if you're trading 3 days a week and you know what the market's doing at any given time, you're keeping up with it, you're trading 3 or 4 days a week, that's an active trader. So anybody who's been doing that, for 4 or 5 months, just know that you're going to have these, whatever your personal problems are that affect your trading, you're going to deal with them over and over, and it takes a long time. From all these traders I've spoken with and interviewed who have been trading for years and years longer than I have, they all kind of say the same thing. You'll have a set of problems that can make things go wrong, and it takes a long time to really get those things under control. So, if you're feeling, that kind of, I don't want to say depression, don't want to misuse that word, but if you're feeling down because you're having, these same issues, they can be improved upon, but you're not alone if you're having these issues come up repeatedly. You just have to be, like Mike said, you have to, like he told me, if I didn't learn from what I did 3 weeks ago, and if I had done that 4 times in the past 2 weeks, that's definitely a red flag. Where if you do it once and you learn from it and you really reflect on it and you realize that was crazy, I should not have done that, I threw away $700-800, and you move forward, then it's less of a problem. So that's kind of a big takeaway. I like to make a point for people that these things, you don't get rid of these problems in just a few weeks, is what I think. It takes a long time.
Not even years. You're always going to have something you fall back on that says, oh man, if I can just figure this out. And then when you figure that out, you might have another problem that says, oh man, if I can just figure that out. Yeah. So
I know what I did.
Over the course of 6 years of trading, I've eliminated a lot of dumb stuff, but I've got a lot of other dumb stuff. So it's one of those things where you might not relate to someone who says, oh, I keep doing this, this, and this. And you go, I don't know why they do that. It seems pretty simple. But then there's things you do that they would look at and say, I don't know why he does that. Right? So whatever it is, we all have issues in trading that we need to kind of focus on and conquer and get over. And the issues are going to be different for everyone, but we all have them. Whatever it is, we all have them.
Yeah. And I also, there's one thing I want to mention before we kind of move on. So let me tell you guys too, we're shooting for about an hour. It's already 4:55. I'm telling you, time just flies when you're having fun. Give us some more questions. What do you got? We definitely got a question up here from Carlos. We'll get to that in just a second. But any questions, comments, anything you guys are struggling with, let us know here in this last 5-10 minutes. And we'd love to specifically address that and just talk to you guys through these questions. But I would like to say this. If you're kind of a newer trader and you're online a lot because you're interested in trading, and let me be clear, I'm not talking about anyone in the black box community. Everyone in the black box stocks community who has a social media presence is excluded from this. But what I'm saying is you see a lot of people bragging about wins and gains and all this garbage. And I may just be a cynic. I mean, you're the New Yorker, Mike, but I'm a cynic. And I think all those people are lying to us. I think when you see all these gains online and all these people telling you how they just made $100,000 in 5 minutes or 60,000 in 8 hours, I don't believe any of them, and I don't think you should either. What do you think, Mike? Is everyone lying online? Because I think they are.
Depends on your definition of lying. So
presenting alternate truths.
well, here's the thing, right? Someone can post a $60,000 gain and say, hey, I took Tesla. This lasted an hour, 20 minutes. I made 60 grand. And it's a completely legit trade.
Yeah.
What they might not show you is that yesterday they took a $400,000 loss.
Yeah, right. Or they have a $3
million gain is great, but they're still between the 2 days a net loss. So it's not
Yes.
that they're lying to you. They're showing you, and I mean, some people, we've caught people lying all the time. So of course there are people out there that Photoshop or whatever. But
Right.
if someone shows a great trade, I'm happy for them. That's great. If it's a legit trade, that's great. What they're not showing you is their entire portfolio.
Yes.
Right? Because no one just, and this is actually funny that you mentioned that. It's not someone I follow, but someone I follow follows them and commented or whatever. So it showed up on my screen.
Yeah.
They were basically saying, someone commented, you only show the good stuff. How come you don't show the bad stuff? And the person whose account it was said, you don't have to follow me if you don't like what I post. And
Okay.
I agree with that, right?
Yeah.
Whatever I want to post on my Twitter account, it's up to me. If you don't like it, don't follow me.
That is
But
true.
in the back of my mind, the flip side is I'm going to show you the times where I screw something up if there's like a teaching lesson out of it, because that's the reality of trading.
Yeah, sure.
If someone never posts a losing trade on Twitter, I'm probably not following them because they're just not being realistic with me. So the difference between those two types of groups, and I'm not like a social media expert or anything, but I'm going to guess kind of in my mind, the way I look at it, the person who wants to be perfect, maybe they're running a business where they use Twitter to, their Twitter following has to be a certain amount so they can translate that into an income or whatever they're doing.
Yeah.
For me, I really don't care. Like I want a big Twitter account so I can, reach out to people and help people, but I don't make an income from Twitter. So I don't care if you follow me or not. So if I'm going to post something that's not perfect and you're like, oh, yeah, I thought you were a perfect trader because you're online. Like, come on, that's BS. Right? So if you don't want to follow me because I posted something where I was like, oh man, I totally screwed this up, then don't follow me. I don't care. I'm not doing it for likes or retweets or anything.
Right.
I think the other people, maybe they're running a business where they have to have this perfect look of how amazing of a trader they are. And that's going to increase their follower count, and that's going to translate into a certain percentage of those followers will pay for a service or whatever. I don't know. The reality of trading is that you make losing trades.
Yeah, and I think especially for newer traders, it's dangerous because we see those things, and sometimes you can feel like everybody's making money but you. And if you're feeling that right now, it's not true. I mean, everyone is losing and making money, but it can feel that way. Like you're the only one that's not making money. And when you see people post stuff like, well, here's how I made $60,000 on Amazon, that might be very much true. And they also might have a $4 million account. So then here is me, the new trader.
That's the other part.
The $5,000 account. You can't make $60,000 on a $5K account without taking insane amounts of risk that will probably just go to nothing. So that's what I don't like about it. It's like people do what they want to do. I understand, but like if you're out there struggling with trading, and I know people are, don't get so caught up in all the gains that are posted because, like Mike was saying, you never know what those losses were. I made 60K today and lost 200 yesterday.
The only thing I can say as far as that goes, if you want to learn from Twitter, and this is just my opinion. It doesn't mean this is, how it works. This is just kind of what I view it as. Find people that post something that you can learn from. So if I post, hey, I made $10,000 today, you don't learn anything from that. It's like, oh, cool, high five, but you didn't learn anything. You're just, oh man, I wish I could make 10,000 in a day. If I could do that, my life would change to this. It's dreamers, right? It doesn't help you with anything. Now, if I post a trade confirm and so when I post confirms, I don't say how much money is behind it. I post the entry and the exit so you can see the percentage gain. Right. But the dollar amount doesn't matter to me because what happens is I don't want you thinking, oh, if I could only do that, 3 times a week, whatever. Like that's not what it's about. It's about look at the timestamp for the entry and then pull up a chart and see why did he enter here? Pull up the timestamp of the exit and look at it and say, why did he exit here? Right? So you can take the percentage gain and say, okay, wow, that was a pretty decent trade. Let me see how it unfolded. You can learn from that. So you'll never really see me posting, oh, I made X dollars today, because that doesn't matter to me.
Yeah, true. That doesn't teach. Yeah, you don't learn much from knowing how much someone makes. And plus, don't forget this. I mean, that's nobody's business. You know what I mean? It's nobody's business how much money anybody has except the person. So there's that aspect of it too, which I'm a big proponent of that. Sometimes asking people how many contracts they have or something. In my
How does
opinion,
that help you?
it doesn't help, but in my
Like
opinion,
in what way is that going to change the way you looked at a trade? And here's a funny example. I've said this a few times before, but not recently. So I know a few people from Twitter that I know in real life, right? There's one that I know. This happened maybe 2 years ago or whatever, maybe 3 years, whatever it was.
like a couple girls you met.
I wish some of them. But these are two traders that are legit traders.
Okay.
One of them posted, and this is funny because the one with the smaller account with the better trade messaged me one day. They're like, "Oh man, people don't like the stuff that I post. I don't get a following." And then this person did this. So what happened was he posted a gain. It was like a $500 gain. And at this point, I don't remember the specific numbers of it, but it was roughly, we'll say, a $500 gain for the smaller account. And then someone else posted like a $25,000 gain. And they had the same kind of amount of followers, similar. But the person who posted a $25,000 gain had likes and retweets and, oh my God, you're the best, you're this, you're this, you're this. And the person who had a $500 gain had like a quarter of that. And what happened was the $25,000 gain was done in an account that was like $500,000, and the $500 gain was done in an account that was like $6,000.
That's so much more impressive.
The better trade was the $500 gain, but people just saw $25,000 and go, "Oh my God, I wish I were you." Well, the guy had $500,000 to be able to do that with. The other guy had $6,000 and made a $500 profit. That's the more impressive trade. So whatever you see online, just take it for what it is. Don't get so focused on everyone's killing it, because they're not.
That's right.
Focus on what can I learn from this person. And if all they post is, gain, 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 that's cool, because you can kind of see that, okay, maybe this person knows what they're doing. But if that's all they're posting and you're not learning anything from them, how does it help you to see that every day they're making, 60 grand?
It can actually hurt you because you start thinking, man, I'm taking losses and this person never loses. It can actually put you in a bad mental mindset. So yeah.
It could, which is actually the reason why we have a room for confirmations, because we got that comments. We got people saying, "Hey, I'm glad for everyone posting all these gains in the main chat, but I had a really rough day today, and to see someone post, they made $10,000, what could change my life. And I ended up losing $3,000 today." Like it's depressing. And we got that comment so many times that we're like, okay, you know what? Let's make a separate room for people to post their confirmations, because when everyone's just killing it, and you're the one person that's not, you're like, well, like, what am I doing wrong? This is insane. And it gets you down. It wears you out.
Yeah, it's draining after a while, for sure. I mean, until you figure out, how to be somewhat consistent, it's just tough.
But like you said, everyone goes through that. So don't ever look at someone on Twitter and just say, "Oh man, I wish I was this person." What you want to do is learn the lessons that they're teaching there and say, "I wish I could grasp this concept." And then when you grasp the concept, you'll be able to do what they do. So don't fall into we call it game porn, right? Don't fall into everyone's just posting these big numbers, because the big numbers, you don't know what happened the day before if they didn't post the day before. You don't know their account size. You don't know if they have a trust fund of hundreds of millions of dollars and they're playing with a $200,000 account where they put the whole account into a trade. Like, you don't know any of this stuff unless you know the person or they're openly sharing, right? So don't fall into that stuff, and like try to follow the people that whatever they're posting it in such a way that you can go back and verify, like, why did they do that, instead of just, oh wow, that was an awesome trade.
Yeah, right. Yeah, there seems to be people who are, and I'm neither of these. I mean, I just do Twitter for the podcast basically, but like it seems to be people who are active traders who are doing the Twitter thing. Like one type of person is just the entertainer who's just seeking likes, who's seeking big numbers for whatever reason. And there's examples of that we could give, but we don't have to. And then there's people who are taking a more educational approach, which is what I think that's why you have so many followers on Twitter, frankly, is because of just you're an educational approach to it, what you do with Trade Talk Media. A lot of the moderators here at Black Box are more of a educational. It seems like you guys are teaching people things, and that's the primary focus, where these other types of accounts are, flashier, and they're more just trying to get a lot of engagement for whatever reason. And it's good to be able to tell those apart as newer traders as well, because those flashier accounts, sometimes if they're not pumping something, they're just they're just selling their own thing or whatever, and that can definitely lead you astray. So you're right.
You're also going to find people that just like the two different types, right? So even within Black Box, there's people that don't like the way I do things, because I don't say, I'll post a chart and say, hey, if it breaks this line, I'm going to look for a trade entry. But I'm not saying if it breaks this line, I'm going to get this week's contract. It's going to be this strike, this expiration, this strike combination, etc. And there are people that say, hey, why don't you post the specific trades you're in? And for me, I don't like when someone does exactly what I do. I want to teach, why did I look at that level, and why would I take a trade if it breaks that level? If you understand that, you can do that on tickers that I don't even watch. So you're not reliant on me to tell you what to trade. Some people don't like that. They want to be told exactly what contract to trade. So there's going to be varying approaches of people that just want to see, these monster gains, and that's entertaining to them. And then there's going to be people that want to learn the underlying, like, how did you get those gains? I don't care what gains you made. I want to see how you did it, so that I can take that information, turn around, and do it for myself. There's going to be both camps. And it's just like, again, I have my opinions on it, but I guess in the long run, one isn't good or bad. It's just what information you're after.
Yeah, sure. There's no doubt. Somebody DM'd me and asked if you were single. She says she lives in Hollywood and wonders if you're single. Do you get that? Do you get people, ladies or guys, whatever? I don't assume anything. I'm very open-minded. Do you get people like trying to take you out to dinner and stuff from Twitter because you're so, on Twitter and everything?
Here's the thing.
We got to know.
I have met people from social media in real life.
Nice.
I've met a lot of good people, and I've had, and I'm not even talking about like relationships necessarily. Right. There was a guy that lives in Vegas that was like, he hit me up on Instagram. He's like, dude, I'm going to be in San Diego next week. I would love to pick your brain about trading. Can I take you out to lunch? And I was like, yeah, so let me know when you're here. We'll go out. I'll grab a place right overlooking the beach. We'll just, we'll chill and have lunch and talk trading. I can do that all day long.
That's super cool. I saw that on Twitter. That was cool.
Yeah, it was someone that follows me on social media, and he's like, hey, I'm going to be in your part of town. Can I pick your brain about trading? And like, if I'm available that day, like, how am I going to say no to that? Like, here's someone that likes what I show online and they want to learn something. And like, you can't shut me up about trading, right? So I love talking about trading. I have a passion for helping people. So if people like are in the area and they're like, hey, are you free whatever day? Let's do something. I've done that a few times where I've set up just a really small, maybe 5 or 10 people, a local meetup that just says, hey, 3 people are asking to hang out, or kind of, hey, can we sit down and talk one day? I kind of live near you. Hey, you know what? Let's do a small meetup. Let's get 5 or 10 people together. Let's go out, have lunch overlooking the water, a nice setting, just relaxed, and let's just talk about trading. So whoever's in Hollywood, I'm going to try to do an LA meetup, but the whole Corona thing blew that up. So we will do an LA meetup again. I did one at this point is like 3 years ago, I guess. We will do an LA meetup.
Yeah, we got to do a what went wrong on camera on location, at your location, not mine, because we had 4 inches of snow yesterday. So.
Oh, you're killing me.
Yeah, it's weird. Yeah, the Southeast, it doesn't know what to do when it snows. Everything just shut down, and
Well, when what went wrong gets sponsored by, I'm not even going to put a name out there because maybe we should, just to attract the energy. But when we get sponsored, and we'll get you a travel budget to come out here, we'll film on location on the beach.
That's right. That's right. That's exactly right.
So if anyone works at a company that is looking to sponsor.
If you're looking to sponsor 2 very talented radio podcast people, okay, no one's looking for that, so we can move on.
Not at all. I didn't expect that, but it would be fun to do an on location, on the beach, live. I mean, we're doing this live now, but to have a on the beach with the backgrounds, that'd be fun to do.
Yeah, we're gonna do that. We had some comments that people in LA, they would love to join. So no, there's no reason we can't make that happen. So here's what we gotta do. The time is moving on, and we do have some questions. So let me ask you a couple questions here. Here's a very quick one. How far out regarding expiry do you look if you're just planning on intraday? How far out do you want that?
100% weekly contracts. I will not pay for time that I know I'm not going to use.
Yeah, the idea, so you never like buy something with a couple weeks on it thinking, okay, if this doesn't work out, then I can swing it. You're just past that. You don't do that.
If it doesn't work out, I'm out of the trade.
Yeah, that's right. That's the way to be right there. That's my opinion too.
It can be, 40 minutes prior to Friday's closing bell and I'm still trading Friday weeklies.
Yeah, sure.
Now, I might see a setup on Friday at, 2 hours until closing bell, and I'm like, hey, I kind of like this, but if it's like not based on a chart necessarily, but based on flow. And I might say, this is a next week expiration, or I kind of like the setup with the chart and the flow combined. Something like that I'll do. But if I'm just kind of day trading based on whatever charts or flow, if I know it's a day trade intention, I'm just not buying the premium for time I know I'm not going to use.
Yeah, right. I used to do that in the early days. I would just give it a few weeks because if it didn't work out, then
it's safer.
I realized like I don't need to do that. If this is going to be an intraday trade, if I'm going to plan it that way, it just needs to be dead as soon as it goes the wrong way. And that's
definitely safer. So I know people that will, after Wednesday, they won't touch the weekly expiration. They'll go to the next week, even if they're trying to day trade. And that's fine. There's nothing wrong with it. It's not something I would say don't do. It's actually safer to do that. In fact, I know someone who buys like 2 or 3 months of time and tries to day trade those, and he's successful at it. So there's nothing wrong with it. It's just, if you're asking for me personally, the way I do it, I'm just going to buy a weekly because they're going to be less expensive and I can buy more of them. And I know for a fact I'm going to be out of the trade before the closing bell anyway. So I'm just not going to I'd rather have a bigger position contract-wise with a shorter time frame than get less contracts that are going to be more expensive that aren't going to move as quickly anyway.
Mm-hmm. Yeah, I'm the same way. I'll also go a little further. I think I like to do around 0.5 delta because I like it to move. I know that's going to miss out on the leverage of a lower delta if it really goes the right way. But like I'm so short term at this point, and this has been the case for months at this point. I mean, I like the 0.5 delta even on the mega caps because I want to be right or wrong, and I want to be done. I don't know. I'm not hanging around. So for me, I like the at the money around a 0.5 delta. But what about you for intraday just scalping? Do you care so much about the delta, or do you have a go-to delta?
I don't pay attention to it.
Yeah, that's what I thought. You just in and you do it, and you.
Now, I mean, if you're buying an at the money contract, the delta is going to be about the same anyway, regardless of what you're trading, right? So, I mean, I have an idea of what it would be. I don't look at it and say, well, this one's going to be 48 and this one's going to be 62. So,
yeah.
I don't do any of that. But I mean, I would have an idea of what it would be. I just don't look it up and verify that specifics.
Yeah, you sometimes would go like maybe 2 strikes out or in the money, and that's about it pretty much? Or are you always going to go out of the money by a strike or 2?
It really depends on the day and the ticker.
Yeah.
So this was a good example on Friday or yesterday, Friday. At the end of the day, I was trading BA, and I forget the specific dollar. So let's just use a random ticker just to make the numbers easy. Let's say a ticker's trading at $100. On a Monday, you might be able to trade a $105 call when the ticker's at $100. On Friday, when there's only 2 hours to go, you don't want to trade the 105 call when the ticker's at 100. So in that case, I'm going to probably go with the $100 call or even the 97.50. Now, Friday morning, you might be able to do a $105 call when it's at 100. But as you get further and further into the day, you don't want to be that far out of the money. So as the day goes on a Friday and we get closer to the end of the week, I'm going to pull that strike price closer and closer. And then by the very end of the day, it's going to be the 1 or 2 in the money versus the beginning of the day, which might be 1 or 2 out of the money. So it depends on a few factors. I can't just do like a blanket. It's going to be this.
Yeah.
My default setting would basically be at the money for a weekly.
Right.
But that's going to be adjusted based on a few factors.
That's pretty much mine too. I just don't adjust it so much. I'm just kind of I have a very I want to be as robotic as possible. So just give me the money, and then I'm going to get in or out. Hey, here's a question that I want to paraphrase for you, Mike, because this is right at the heart of this series. This is an important question. So this person basically made and gave it all back. This person made a lot of money trading. Okay. And gave it back. So the question is, this is the core of it. He thinks, or she thinks, a big part of giving it back is that they like to trade by their own feeling, and that has caused them to give back immense amounts of profit. They're saying they want to start over, but how can they learn not to overtrade? And this is a lot of money. So this is an important question. So somebody who is trading kind of on feelings, what do they need to learn to not just overtrade, but to trade more data informed? What advice do you have for that? I think thank you for asking that. That's a very important question.
The first thing to learn is that the market doesn't care what you think. To put it bluntly, the market just doesn't care what you think. Oh, I think, this is going to go up, 50 points because after ERs, they said this and they projected this. The market doesn't care what you think. So a long time ago, I learned that I had feelings on the market and, oh, well, this should probably do this. And the market repeatedly said, Mike, you're an idiot. You don't know what you're talking about. So the more I realized, if the people at Morgan Stanley can't tell you, look at all these analysts with price targets. Do they reach those price targets? I'm sure some do and some don't, right? So it tells you that even these guys who are, 30 years of experience, they don't always get this stuff right.
Yeah.
So I learned a long time ago that I won't be able to figure the market out. And I've accepted that. I won't be able to figure the market out. So I kind of narrowed my approach to how I look at the market. And it's not about what I think or feel. It's about what is the chart telling me.
Right.
So I'm going to mark and I'm a technical analysis trader, so that's the basis of all of this. I'm going to mark my support and resistance levels, and it breaks a level or it doesn't. It's not a matter of what I think it should do. It's doing it or it's not. And as soon as I got out of the idea of, well, I think it should do this, then my trading improved. In other words, you're in a descending triangle, and you're going to buy a put because it's going to break to the downside. Well, no, a descending triangle says it in statistically, it looks like it should break to the downside, but it doesn't always. So if you're going to anticipate something, or I think it should do this, that's where you're going to get into trouble.
That's right.
All the time. Part of what we're doing as traders is kind of anticipating the future anyway, right? That's why you buy a call, because you think something's going up, or a put because you think something's going down. But it's not a matter of I think it should go up or down. It's a matter of the chart is showing me that it is going up or it is going down.
That's right. And I would like to say too, like anybody who kind of has this thing, it sounds like this idea of following people. The person also mentioned like following people blindly into stuff, and trading on feeling. Like if you're not really good at support and resistance, Mike has a video on Trade Talk Media that's kind of legendary. It's 4 hours long, and people kind of consider it a rite of passage. But in all seriousness, I want to reiterate that point he made. Like, trading is identifying probabilities, and the more data you have informing your trade, the more of a chance you have to be profitable. So I wish I had that link handy. But anyway, but on his Trade Talk Media YouTube channel, I'll type
it. Actually on 7-Star, but I think I might have it linked on Trade Talk, but it's on the 7-Star Traders YouTube.
Yeah. What I'm getting at is just learn support and resistance very deeply. And, for me, it took months to feel confident with it. So that's a big thing. What he's saying is don't feel anyway. Just look at what the chart is telling you to do or not to do, and try to, even though it's really hard, especially, and this is a unique situation when you're coming back from hundreds of thousands of dollars of losses. Frankly, if you're coming back from that is, you're in a psychological place that's going to be very difficult. So if if you do want to keep doing it, if you don't just want to quit, what Mike is saying is very important. Support and resistance. You're going to have to learn what the data is there and what it's telling you. So yeah,
there's two things I can add to this here. So first, if you got, again, sometimes we speak to Black Box members because that's where, that's just the team we're a part of. If you guys know Jenny B, she is absolutely phenomenal with market sentiment. So she does trade based on, I feel this could do this because of this. I'm not good at that, and most people aren't. But Jenny B is phenomenal at she has a feel for what things are going to do, but her track record shows that she's right a lot of the time. So there is such a thing as, just knowing the sentiment of stuff. And some people can trade like that. But I feel like a lot of people, when they say I'm trading on feeling, I think, and I'm just interpreting what I think about this, is that they're probably referring to, oh, this ticker should be $100 within the next 2 or 3 weeks, so I'm going to buy a call based on that or whatever, right? So you can trade on sentiment, but Jenny B is a beast the way she does that, and most people just can't do that. I mean, if we could do that, we'd all be millionaires, right? And then the other thing is, I get a lot of DMs from people that have lost the amount of money that could buy a beautiful house anywhere in the country, like a lot of money, right? The first thing I tell them every time this situation comes up, put that loss and that money out of your mind. That money is gone. Okay, so if you lost $100,000, your first thought is probably, I've got to get that $100,000 back. And you can't. That money is gone. Now you can work your account back up to the $100,000. But if you're focused on, I lost that 100, I need that 100 back, I feel like you're just going to dig yourself into a bigger hole. So first things first, understand that the money you lost is gone. It's not coming back. You're going to make new money to replace it, but the money you lost is gone. The stuff you did to lose that money, you can't keep doing, or you're going to lose another 100,000. So there's two things that you have to get your mind wrapped around. Is one, don't chase those losses. They're in the past, they're done. You're starting fresh with a new dollar amount. And two, you've got to do things differently than you did them the first time, because if you do the same things you did the first time and then you keep wondering why you're losing money, well, because you're doing something wrong.
Yeah, and that takes time too. Like we're getting some comments on this. This is definitely, people can relate to this. Like someone says, it's hard to forget the lost money if you keep a trading journal and you see it every day. So I mean, I can understand where that's coming from.
It is, and it's psychologically, if you lose a lot of money, you're not waking up the next morning going, oh, sweet, I've got a clear mind. How can I look at these charts and make money, right? You're looking at the charts going, oh my God, I got to find something to get that $100,000 back. It's a completely different mindset, and it's not easy to ignore a big loss. It's not. You can't just maybe wake up one day, snap your fingers, and start fresh. So maybe you do need to take a week off and not look at the charts, whether it's meditation, whether it's adrenaline, whatever you do to kind of put your mind, body, and soul at ease. Do that for a week. Maybe it's a day, maybe it's 3 weeks, who knows, right? Whatever your time frame for your situation is, but you've got to find a way to say, listen, that money is gone, those trades are over, here's where I am right now, and here's what I need to do differently. And if you don't know what to do differently, that's where, like, hopefully you have people you can reach out to that say, hey, can you just take a look at some trades? Maybe there's a pattern that I don't see that I'm doing wrong. Whatever it is, you've got to do something different so that you don't lose the next 100 the same way you lost the first 100. And it's not easy. It's absolutely not easy, but you've got to clear your mind to the point where this is where I am right now. The past is the past. This is where I am right now. What do I have to do right now to go forward? Because the more you focus on what you did in the past, the more you're locking your mind into that losing mentality of, I just lost $100,000. So, and that's the forefront of your mind. How are you going to get out of that mindset if all you do is remind yourself about how much money you just lost?
I think, and other, like, people, someone else says they lost 4.5K and then lost another 4,000 trying to chase it back. That's common stuff. Like, I think I've never lost serious money. but I have, lost a couple $1,000 here and there. And, I didn't like it, but it's not this huge thing. But even that amount, and this was just money that I was okay, my wife was okay, and everybody was okay if I just lost it, right? It was in that part-time trading account we talk about. But I think when you lose money and it's significant to you, you have to find some way to you have to heal. You have to find a way to be at peace with the fact that that money is gone. It's gone. You made a mistake. Whatever happened, happened. You have to heal, and you have to be at peace with the fact that you lost X amount of dollars. And then maybe you can start, like Mike is saying, looking at what did you do that made you lose that, and how can you start to make trades that are going to be profitable. And even though, you'll probably keep track of it and say, great, maybe I'll make it back one day, but the idea isn't about making that money back. It's about just making money going forward. I think that's a big, that's a significant difference to all this. You have to kind of find a way to move past the money you've lost. And that's hard. I'm not saying it's easy. I'm not saying, and I've never lost big money like you guys are saying in the comments. So I'm not, downplaying anything that people are going through. But I think there's something along those lines. What do you think, Mike? Do we have to come to term and heal a little bit before we can have a clear head to move forward with trading if we're going to?
You do, because if you're just focused on how much you lost, you can't be focused on how much you can gain in the future. You're locking yourself into that mindset of, oh, great, I just lost a lot of money. Well, how clear of a mindset do you think you're going to have going into the markets? And you're probably not trading clear, because you're trading like, oh man, if I place this trade and this one goes bad, oh, I can't do another losing trade. Right? We've all been there.
That's
How
right.
many times have you hit the button and instead of going, okay, this is my support, this is my resistance, we're in a trade, versus how many times have you hit the button thinking, oh man, I can't lose on another trade, this one has to work out.
Right. Yeah.
Right.
Yeah.
The mindset difference between those two people is going to be, it's a monster difference. So you've heard Kang say this, right? Trading is 10 or 20% pushing the button at the right time, 80% managing your emotions.
Right.
And again, I'm not saying it's easy, not at all. I think there's a part of me that's broken in that I can look at a chart and not have an emotion, but that came from a part of time where, like I said, if you haven't cried yourself to sleep in the fetal position, you just haven't been trading long enough. Unless you're just some genius savant that gets it. We've all been there, to the point where we feel like, oh my God, I cannot for the life of me figure this out. I cannot place a profitable trade. We've all been there. So you've got to take yourself out of the mindset of, I can't make a profitable trade. Because yes, you can. You've done it before. Of course you can. You've got to set yourself up for success. And when you're just locked into that prior period where you've just lost money, you're not setting yourself up for success. You're focused on the fact that you're losing money. So your whole mentality is geared in that negative mindset. And it's not easy to get over it. I know that. But you've got to get to a point where you say, okay, here's where I am right now. What do I have to do from here to get to where I want to be?
That's right. A reset. I think it helps too. Like if you've lost significant money and you're take some time off, you're coming back. But just that hopefully is what you're doing, because there is a time when you just have to stop and you have to assess it and maybe take some time off and then start paper trading and you start over. But that if anybody happens to be in the ongoing mad rush of chasing back and revenge trading, and you're losing day after day, people are saying, you've lost thousands of bucks and lost thousands of more trying to get it back. That I totally agree with Mike. There has to be you have to stop that, and you have to get to the point where you can reset somehow. And hey, I'm no expert on that, but I do think that is some very basic good advice, is that, if you're hemorrhaging money out of the bleeding account, you've got to stop and figure out what's going on. And that probably doesn't include, doing 15 trades Monday. You know what I mean?
Here's the other thing, right? There's something you can do immediately, right? You don't lose $100,000 by doing small position sizes, right? You don't.
That's right.
You can't convince me that you're doing small position sizes and lost $100,000. Now, maybe over the course of 15 years, if you've never had a profitable trade in 15 years.
But not
So
in 1 year.
Losing a lot of money, the first thing you need to do is stop trading with a lot of money.
Yeah, that's right. That's right. And then if I think this too, and we're getting into probably trade psychology stuff and all sorts of things, which are very, important to us all. But if you're, say you're doing 100 contracts and you've lost all this money, and then if you just can't do one contract because it bores you or because you just, it's too slow or something, then there could be adrenaline problems, and you don't want to have adrenaline problems with your trading. That's 100% true. So if you can't do these small position sizes for whatever reason, that's probably a symptom of something you need to get to the bottom of.
Yeah, and it might not be one contract. It might be a number that makes sense to you, right? So let's just say your trading account is $100,000, but you have, $2 million in the bank, right? So, and if you say, well, I've got $100,000 in my trading account, I've got 2 million in the bank. If I trade a $400 contract, it doesn't mean anything to me, $400, so I'm not even going to really pay attention to it, right? So you might need a certain dollar amount where it kind of makes you say, okay, I've got to watch what's doing and learn to manage this. So, because I know I've done that. I've gotten to a point where there was a period where I had like 2 weeks in a row where I couldn't make a profitable trade. And I went down, just like I tell everyone else, I was like, I'm going to do a single contract and I'm just going to like refocus on the charts, get my confidence back, and then go right back to where I was prior to that. And when I was trading one contract, I was like, this dollar amount has no significance to me that I don't even want to watch the chart, which is bad because I needed to watch the charts to learn, like get back into that positive mind frame.
That's
so
right.
There might be something like that where it has to be a dollar amount that makes sense to you in order for you to like capture your attention. Because if you have $1 million trading account and tell someone to trade a single contract, they're going to be like, no, I'm not doing that.
Yes.
But if you have $1 million trading account that was $3 million, you've got to do something different,
right?
So you don't lose your last million.
Yeah.
And I'm just using these big numbers just to, I don't have millions of dollars in a trading account myself. So I'm not trying to be like, oh, I've got millions of dollars. No, we all go through the same thing with various dollar amounts, but just, get that to the point of you've got to do something different, size down so you're not losing that much money that quickly. Pete has a saying that says, don't be in a rush to lose your money, right? Slow down.
That's right.
Slow down and learn what you're doing with a small amount. It's okay to lose a small amount. It's okay to lose a small amount a few times. It's not okay to keep losing big chunks of your account at a time. So slow down, find if one contract doesn't even capture your attention to watch what you're doing, whatever the number is, but make it a lot smaller. So you're losing smaller amounts and you can learn why. Because that's what we're after, right? We're not after making money. We're after learning why we can make money or how. And once you learn how, you can do that on any ticker, any market conditions. You can do stocks, you can do options, you can do Forex, whatever it is. Once you learn how to do it, you can do that in various situations. So you shouldn't be after, I need to make this $100,000 back. You should be after, I need to learn how to trade so that I can make $100,000.
Yeah, that's right.
And if you're just losing big chunks of money at a time, it's harder to do that. So you've got to size down. That's something you can do on Monday at the opening bell. Just commit to, I am not going to lose $20,000 today because I'm not going to expose $20,000 to the market.
Yep. Yeah. You are in charge of how much you lose just because you're in charge of how much you expose. No doubt. Yeah, so I definitely appreciate those comments. And yeah, she definitely says she'll be watching that video again. And here on the screen, I've got Mike's and my contact information, and I hope that definitely helps. But let me see if we missed anything. We just can't do it, Mike. We just can't do an hour-long show, can we?
You can't. You got to put a muzzle on me.
I mean, both of us. We didn't even have anything planned today, and it turned into this. This is a good event. I appreciate it. A couple of comments have said how FinTwit is like a blessing and a curse, and I would just say it's a curse. I would just say it's a curse. I'm not a FinTwit fan, but I understand a lot of people like it. That's just
I like it for various reasons, but if you get caught up in it, it's a colossal waste of time in life.
man. You think OFG, old effing guy, you think he's a real person or just somebody who's just full of it? Or
Is
are
that
you
an
aware?
actual Twitter name?
Yeah, it's a FinTwit. It's a
I don't know him.
I'm sorry, stock twits is what I meant. They're talking about stock twits is a blessing and a curse. That's what I meant.
Stock twits is 100% a curse.
Stock twits is.
But you know what? When Blackbox was starting out, that's how they got a lot of people from stock
I
twits.
heard that. Yeah, Mario.
So, I mean,
yeah, Mario said
I'm
that.
on there. I'm posting what I think is quality content, but I'm not on there. So there's a thing about Tesla where the Tesla bulls, and actually it was Baba as well. If you went on there and said, I think Tesla's going down this week, here's a support level that broke, here's the next level, and you just do a technical comment, they would pile on you saying how much of an idiot you are.
Yeah, right.
It had nothing to do with the chart. It was just you were called names because you disagreed with what everyone else wanted. So in that environment, you're not going to learn anything. It's stupid. And there's people that was posting that said, hey, I'm bullish on Tesla. I'm just saying for this week, it looks bearish. And they said, oh, shut up. You don't know what you're doing. So it can be a cesspool of crap.
Yeah, they don't know what you're talking about, probably. Yeah,
that's the worst out of all the sites, I think.
Yeah, gotcha. All right, so here's one. Don't want to miss this one. Maybe this might be our last one. Well, someone did ask, where can they find that 4-hour support and resistance? Like on the screen, you see Mike's Twitter handle, 7 Mike. You can go to his Twitter page, and it'll definitely be linked in his information there. TradeTalkMedia.com is his website, but you said it's probably on your 7-star YouTube. How many?
Well, it's on 7-star YouTube, but if you go to TradeTalkMedia.com, if you scroll down, there is a section that says Learn Options, Learn Dark Pool, and Learn Technical Analysis. So the Learn Technical Analysis, that's the video there. So you can find it directly from the Trade Talk Media page. That's probably easier. Or if you just go to YouTube, in the search bar, just type in 7-star traders. But it's directly linked on the Trade Talk page. If you go to YouTube, you have to scroll through to find it because it's been buried by a bunch of other videos.
Gotcha. Yeah, I remember watching that for sure. I watched the whole thing. I thought that was I love it. I love the one line thing. I remember I'd kind of done that before, but in the beginning I had all the bottom indicators on. I had the MACD and I had various things I was using. And under your influence, I have been getting fewer and fewer indicators. I have no bottom indicators at all at this point. Definitely check out his style of trading.
If they work for you, they work, though. I'm not against them necessarily. I think of, and I've seen people use like 7 indicators and they're like, well, I couldn't find an entry. And I'm like, yeah, because 3 said don't and 4 said yes. If you have like 2 or 3 that you like and they line up and you're like, how to use them, I'm not against them. For me personally, I just can't use too much on the screen because I can't focus on a lot of stuff. So when I see lines all over the place, this one's moving up, this one's moving up faster, this one's moving, it's too much to focus on. So for me, it just turned out to be my brain can't like process all of that live data with all these moving lines in one spot. Yeah. So I just had to simplify it. And there's a lot of people that, from comments I get on Twitter that say, oh my God, I can't believe you trade with 1 or 2 lines and that's it. And then like a week later, like, hey, I tried it and check out this entry. And they show me a trade confirm and I'm like, crap, that was an awesome entry. And they're like, yeah, I just had, 2 lines and then RSI or whatever. Like they've limited what they look at. And, it works for some people. Other people like indicators. So I'm not against them. I don't think you need 15 of them.
I didn't really understand the indicator. You okay?
There is a large motorcycle population where I live.
Oh man, do you remember that episode of South Park with all the bikers? Did you ever see that one? And like when they talk, they just that's like that's how they talk. Well, people love motorcycles, and I grew up around motorcycles. Used to race motocross, and I've had street bikes and all. They love motorcycles in beautiful weather places. So,
Oh,
uh,
for sure.
you're in motorcycle heaven, I bet. All right. So, nonetheless, like I was saying, basically, several more people are in LA. They like this idea of a meetup, and
Yeah, we did one in Venice Beach the first time, and the second one was planned like a month before the coronavirus hit. So once that happened, obviously we couldn't go out. And since that's happened, I haven't really thought about, I mean, I thought about planning another one. I haven't thought about it to the point of having a date lockdown, but we
yeah.
will do an LA meetup for anyone that's interested in just chatting about trading. It'll basically be somewhere probably on the beach. I don't know if we'll do Venice Beach again, but we'll do something on the beach, likely where we'll find a nice restaurant to just sit around and take up 2 or 3 hours of chatting while we have lunch and hang out afterwards, doing whatever. We'll definitely do one. We just got to figure out the logistics and the timing and make it all work. But we will do another one for sure.
Can we drive the Lamborghini? Will you bring the yellow Lamborghini? Can we drive that after
I will
dinner?
bring it out.
Okay. Well, you heard
Well,
it.
actually, before I say that, I would have to actually go buy one. But if I had one, I would bring it out.
Well, Laurie in Hollywood, she probably thinks you have a Lamborghini or something. You know what I mean?
I do not. I
All right.
had a few sports cars in my lifetime, and before I die, I will have a Lamborghini, but I do not have anything
So you
exotic.
actually do want a Lamborghini? Like,
Oh yeah.
I'm not caught up. I mean, I like cars. I like motorcycles. I'm just not caught up in the exotic, sports car world. I don't
So
know.
here's the thing about it. I don't want the Lamborghini so people can look at me and be like, oh, I wonder how cool he is or what he does.
Yeah.
No. I want a Lamborghini because when you press on that gas pedal and you're pushed back into that seat and you hear the engine roar, there's no better sound or feeling than that. And I'm kind of guessing that based on having, like I said, I had a race car that had 600 horsepower. And when I stomped on the gas, the feeling that you got from that was just pure rush. And I know if I had a Lamborghini, it would be that times 10. So
Yeah.
I'm kind of a car enthusiast to the point where I like driving them. It's not like a status symbol. It's not an ornament for the driveway. The feel of driving like a very finely tuned, impressive, powerful machine.
Yeah.
Oh man. So that's why I want one.
I would love to drive one a few times on a track or something, but I wouldn't spend any money. I've got access to a Dodge Hellcat that I can drive now and then. A friend of mine is into cars, and I tell you what, the Hellcat is something else. If you ever get a chance to drive one of those, I think you would like it. And I'm no Tesla fanboy or anything, but some of the upper level Teslas have torque that might rival some of those exotic. Have you driven?
Oh, they do for sure.
Yeah,
but I can't get one. I can't get a car that you have to plug in. I can't do it.
you gotta have the
I know you're a hippie and you're probably upset with me right now, but I can't do it.
Not at all. Not at all. I'm a hippie, but I'm also a libertarian. It's like whatever you want, it's cool with me. But like, listen, I hope everyone learned that Mike does not currently have a Lamborghini, but he will have one day. And I also hope, more importantly, you guys learned something and you guys had a good time tuning in. We're going to be doing this a couple Saturdays a month. And we really appreciate you guys coming. There's still 30 of you here, and we really appreciate that. So not next week. We're off next week, but the week after next, we'll be back possibly with a special guest. So we'll definitely keep you tuned in on that. But here's what I want you to do, Mike.
Throughout this week that you're like, oh man, I thought I did good, but it just didn't work out. What we need from you guys is copy. Actually, it's on. I'll put a link on Twitter at some point. But what you can do is copy the time that you entered the trade, the time that you exited the trade, and whether you were in call or puts and what strike and expiration and whatnot. Send that to us and we'll take so we haven't really done a lot of screen shares on this one. This is more audio for today, but send us the trades that you guys think you had a good entry and it just didn't work out for whatever reason. And we'll pull that up on the screen and analyze and say, okay, I like where you got in here, and this is some of the things you can look at. And not that we're trading gods and you guys aren't, but it's just another set of eyes looking at something from a different viewpoint. So send us your trades that you want us to evaluate, and it'll be a screen share where we pull up the chart and show you how I look at a chart, and River can show you how he looks at a chart. And again, it's not saying we're right and you're wrong. It's just a different set of eyes with a different viewpoint with your specific trade. So I know I don't use a lot of indicators. I might look at a chart one way and River can say, well, you didn't see that the VWAP was just 20 cents higher here, and that's why it rejected where it did. So again, it's just different eyes looking at the same thing, not saying we're right and you're wrong, but more of along the lines of just next time you take an entry, maybe look for this set of scenarios that you weren't taking into consideration on this trade that didn't work out for you. So send those to us. I do have a link. Let me figure out on, should have been more prepared. I'll post it on Twitter because there's a link I have where you can just fill out a form that says when did you enter, when did you exit, etc. That makes it really easy. But we're going to take your trades and we're going to analyze them with you guys to see if maybe there was something you missed. And we did this 2 weeks ago. I think we had an example where someone lost money on a trade and I said, you know what, I actually liked the entry. It was a good entry. It just turned out that there was no follow through and momentum. So we took a look at it and analyzed where the exit could have been improved, but the entry was a good entry. So sometimes that's what it's about. It's just evaluating a trade from different viewpoints, and we want to help you guys out. And by doing that, it helps us make us better traders also. So if you guys have those trades you want to evaluate, send them in to us. And on the next time we get together, we'll do a screen share where we pull it up. So it's not always audio. Today, we just didn't really have a lot of stuff to look at on the screen, so it was more audio, but we will do video where we're analyzing your submitted trades.
Yes, indeed. And you've got 2 weeks also, Mike, to have a losing trade as well. I know you didn't have one this week, but you got 2 weeks.
Oh, I will have some in 2 weeks.
Figure something out for sure. Well, all right, Carlos, Nick, William, thank you very much. I'm glad you guys came. Glad you will come back. Travis, yes, thank you very much. We appreciate that. We will see you around the community. Follow us on Twitter and send me an email if you have any questions. I appreciate you guys coming out, and we will be back in 2 weeks. And there's a lot of time between now and then. We will be in the Black Box Stocks community every day. So come see us, come say hi, and thank you very much. Mike, it's always fun to do it, and I'll see you soon.
Enjoyed every time. And like you said, 2 weeks, I will be back. Talk to you then.
All right. You guys have a great day. See you later.